An interesting stock for 2025 is Carnival. Carnival is actually a growth stock. I wouldn't say it's a company with cruise ships. Why would be a growth stock? Well, yes, because the profit growth is likely to be very interesting in the coming years. The upside potential is definitely there, but the ride will naturally be a bit more volatile. I personally have a position of about 3% in Carnival. It's in the Interactive Brokers portfolio. I also regularly share the DeGiro portfolio, so subscribe definitely to keep following those updates. Soon I will provide an update on my Interactive Brokers account. My total return is actually 0.2%. I bought somewhere around here in November, but recently it has dropped a little. A small dip. Could it drop a bit further? But valuation is still attractive. So I think the stock will continue to rise. In any case, for the upcoming period, if we look at some analysis, there are a few interesting things. First of all, the infinite ratings from quite a few analysts. They indicate that the price target is expected to be slightly higher than the current price, plus 20%. Let's take a look at Morningstar. They give a 4-star rating with a fair value that is actually around that same price target. So that implies potential high returns, at least for the short term. What will happen in the long term? No idea. We'll see about that. Let's look at the forecasting and devaluation based on the earnings growth per share. In other words, the EPS, the current or the own condition date price to earnings, has now dropped to 16.6 after a small dip. And if the growth expectations from analysts are correct, a total of about 22 and 11, and this looks quite realistic, then a price to earnings based on the normal multiple of the past 18 years of 16, which I think is realistic, could lead us to an average return of 18%. Of course, you have to take this with a grain of salt. That could be lower or higher. It's only interesting to look into the strategy after Carnival because, of course, they have been hit really hard by the corona crisis. And a big downside to this stock is that they have relatively high debts. So the market value is 31 billion and the amount of debt is 28 billion. Only management seems to have the position under control. And they have an interesting strategy to at least to boost a spending and attract more customers. That seems to be working really well because for several quarters in a row, they are achieving higher profits. Now the price to earnings, so that's now between 16 to 14 for the coming year. And the price cash flow is actually very low, also a lot lower than the sector average. So that's important. And the price to sales is about 1.2. So it's a bit around that level. So if the market value is 31 billion and the price to sales is 1.2, then the revenue will be around 28 to 29 billion. And that could rise significantly. There are also a number of good initiatives that have been launched. So I'm really curious to see how they're going to perform. Yeah, I don't know. I have a holding in this myself, but it's only 3%. And yeah, if it doesn't work out, then 3% isn't that much of a loss, but it could potentially grow a lot. Do you also see that it has been heavily shorted on the factor analysis? This is already a data model that I trust a lot myself and has offered me a lot of success in the past. If you want to try this free, this program from Seeking Alpha, we have the discount link. You'll find it in the YouTube description. Definitely check out the discount link. You can also try it out for free for 14 days, and then you get the discount whether you want it or not. And a number of analyses that come out of this from Strong Buy, they often are potential winners for the coming year, and Carnival scores really high. As you can see, also with growth, a lot of interesting growth. So it's expected that the company will achieve much more growth and profit growth. That's why Carnival is a good stock. Mutual equity is currently remarkably high. And look, they come from minus 31% based on the 5-year average. But that is, of course, they were hit very hard by the coronavirus crisis. Mutual equity, at the moment, it's definitely very high. And the profit margin is starting to rise again. Zexrank gives a buy rating, always positive if they think that because they are more focused on the short term. The price target, which is expected to come in the next 6 to 12 months, is 27. We've seen other price targets. That's around 29. And the value estimate for Morningstar is around 31. Now, I do think that by 2025, Carnival could rise by about 20%, but we'll see. That will come with some volatility. You can also see that the price is starting to drop. So it's interesting to see how far, and those agreements occur frequently. Actually, it had already dropped by minus 76% here. So that's really bizarre. Recently, it had dropped again by minus 42%. So expect What the stock is going to do now is drop. If you're lucky and you're watching this video, then the price level drops to 19/20. That seems like an interesting moment to me. And don't forget the long history of the company. It has really dropped a lot, even down to a low of minus 90%. Then you think of a great company like Carnival, it's dropped so much, but that of course has to do with the coronavirus crisis. And yes, there is some uncertainty because of those high debts, but that actually presents the opportunity as management in which they succeed in just letting the company grow. If they can pay off those debts properly, then the profits can only increase more and faster because of course they will also pay less interest. So Carnival is not really a company that seems risky to invest in. Only in the financial situation it can actually be risky, but the upside potential can also be very interesting. Only in the financial situation can it actually be risky, but the upside potential can also be very interesting. Do you have more knowledge and insights about Carnival? Let me know, share your response, and help others with your insights. And I would too. I find it interesting to learn more about it, of course. I have a position of 3% myself, and I expect it for the short term, 25, 2026. And after that, I don't know. If the valuation has gone up too much, I think I will sell